Alright guys, I got this from MSN and it looks absolutely good. Goldman Sachs laid off the most employees since the 2008 financial crisis. As you can see here, MSN Money, Goldman Sachs logs its most layoffs since the financial crisis. Right here in the opening paragraph, it slashed 1,700 positions in the past 3 months. It's the firm's largest quarterly reduction headcount since the financial crisis. And basically it underscores more troubles for Goldman. So as you can see, ladies and gentlemen, this is absolutely correct. So again, this is absolutely true. Again, MSN Money, Goldman Sachs logged its most layoffs since the financial crisis. It slashed 1,700 positions in the last 3 months, the firm's largest quarterly reduction in headcount since the financial crisis, which underscores troubles Goldman is having maintaining profitability at a time when Dodd-Frank and other regulations have significantly limited its ability to make money. The firm now appears to be leaning towards slashing budgets as a key to boosting its, I'm guessing, profits. Let's see what the wording is. Bottom line, Goldman CFO Harvey Schwartz in a conference call with analysts called the Quarterly Challenging and said that its company had embarked on a cost-cutting plan that will save $700 million a year. Earlier this year, Goldman told employees to cut back on travel plans. The layoffs mean Goldman reduced its staff by 5% in its second quarter alone. So alone means it's laid off more than just the 1,700. And in the second quarter alone, they laid off 5%. It's the third quarter in a row that the firm has eliminated positions. All told, Goldman has cut 2,100 employees in the past 9 months, so that's the whole number. On top of new regulations, the reduction comes at a time when Wall Street business in general has been slowing, which usually happens during the summer. Goldman reported better than expected earnings for its second quarter, but revenue from a number of segments, including equity underwriting and stock trading, were down dramatically. Alright, so basically we know they said that they were cutting $700 million, or would represent only about 3.5% in reduction in annual expenses. What's more, even after second quarter cuts, Goldman returned on equity in the quarter was only 8.7. If the firm were to cut another $700 million out of expenses, that would only increase the ROE or ROE to just under 10%, so that would make any major situation well below the ROE of Goldman before the financial crisis, when the figure regularly topped 20%. So even if they did another 2,100 people, folks, went down to bare bones staff, it probably wouldn't cause it to go up more than 10%. So that's not good. And they topped 20% before the financial crisis. So this is more than them hurting. This is absolute financial trouble for all of them. All the major companies like this are going bad. In a conference call with analyst CFO Schwartz was asked by veteran bank analyst Mike Mayo whether the firm had cut too much, and basically Schwartz had said, "We view this as a very thoughtful exercise," Schwartz said. "We certainly haven't sacrificed our commitment to clients, but they have sacrificed employees. But it's not clear that the firm is all that committed to cost cutting where it matters. Despite the layoffs, pay doesn't seem to have been dented at the firm." For the second quarter, Goldman gave its Remaining 34,800 employees, a 30% raise. So they could have probably not done that. Average pay and compensation with benefits rose to $95,718 for the second quarter of the year. That means the average Goldman, including assistants, junior reporters, and IT employees based on the second quarter, is still paid just over $380,000. Indeed, not much sacrifice there. So, as you can see here, folks, overall 2,100 employees, but 1,700 in the second quarter, which is either altogether or in the second quarter alone, more layoffs by Goldman Sachs since the financial crisis. This is a big deal. This means these guys are expecting something like a bubble to hit. So they're paying their people that they have more now, their 38,500 people they have now, more, basically telling them to probably get prepared for what's coming. Meanwhile, they let go, what was it, 2,700 and 1,700 in the last quarter? Thank you.